You stare at your screen, watching a digital number climb higher, believing you've planted a seed that will grow while you sleep. But in Orlando, Florida, 2,000 people learned the hard way that their seed was never planted at all. They weren't building a portfolio. They were funding a stranger's garage full of Lamborghinis. That man, Christopher Delgado, didn't build a fund. He built a stage, and every deposit you made was just another prop in his play. It starts with the first prop: trust. Delgado didn't target strangers. He started with his own circle of friends. He didn't ask for $10,000 up front. He asked for their belief, the only currency a trap like this needs to survive its first year. When you handed over your cash, it wasn't deployed into the market to fight for your future. It was buried the moment it landed, repurposed instantly to pay off yesterday's investor, so today's investor could sleep soundly. You called it a liquidity pool. Delgado called it a magic trick. But here's the trap that catches almost everyone. The urge to believe the machine is bigger than the man running it. Once those first checks cleared, nobody asked where the yield was coming from. They didn't need proof because they had a digital statement with a rising number, and a number that goes up doesn't ask you to think. That isn't security. That is a cemetery with a high-definition interface. As the stage grew, so did the props. By the time Delgado's operation crossed into 8 figures, the real enemy wasn't the market. It was the ego of everyone involved. He began to fill his own personal museum: 8 properties, 11 vehicles, 30 watches, and 50 luxury bags. This was his death zone. The point where the fraud felt too massive to be fake, because who would risk such a lavish public display just to lie? Investors stopped verifying and started bragging, while Delgado stopped hiding and started sponsoring charity galas. The bigger the lie became, the safer it felt, right up until the moment the floor fell out. Then came the final act. Once the scheme crossed the $300 million mark, the illusion required a new engine, a supposed piece of technology that read the market and generated returns automatically. Investors watched the engine hum, believing it was the secret to their wealth. But when investigators finally pulled back the curtain, there was no market data, no complex algorithms, and no artificial intelligence. There was only a server, quietly spitting out whatever fake number kept the illusion alive. The engine wasn't a financial breakthrough. It was a random number generator wearing a suit. By January 2026, the machine finally ran out of new soldiers to feed it, and $250 million in losses came due all at once. When the system collapsed, Delgado pleaded guilty on July 1st, forfeiting the houses, the cars, the watches, and the bags that had served as his props for so long. The plea deal stripped him of his stage, but it doesn't answer the one question that still haunts every victim. Where did the money go that never came back? The court is set to weigh in on that missing fortune on October 8th. If you can track where the cash actually flowed once it left that fake engine, you might find the real architects of the collapse. But how much of that money was already laundered before the server even stopped running? That is a story for another time.